Hey guys, Mark Sheridan here from Toomey Schreiber Property Group and CairnsRealEstateAgent.com. I'm sitting here today with Joel McCartin from Loan Market Cairns. Joel, welcome. Good morning. How are you?
Good, Mark. How are you?
Yeah, excellent, mate. I just want to go through a few things with you, and just about the whole loan side of things, working with buyers, working with sellers like we do. Advantages, disadvantages, benefits of using you yourself as a broker, and just what the benefits are. So I guess we'll start off with your company. You've been in it for a while. Why use a mortgage broker?
There's a few reasons for using a mortgage broker. First and foremost, as a broker, we've got access to over 30 lenders and 1,000 products.
Yep.
Which means that we can sell the client and their situation to get them the best deal across many lenders. Another reason would be the difference between Bank A and Bank B can be tens of thousands of dollars, and how much that person might be able to borrow based on their situation.
And because you look at years ago, it used to be only the banks, didn't it? Banks or building societies, and that was the way to go. You'd go into your local bank and you'd speak to your bank manager and do your loan, and that was it.
Exactly, and that's the thing now. So your bank might not be the lender for you. So all the banks specialise in their own thing, and depending on where you come from, what your history is, any sort of bad history, well, the big four banks aren't going to like you, but that doesn't mean that there's no lender for you. So for me,
I guess that's pretty prevalent in today's day and age, isn't it?
Easy for bad things happen to good people.
Yeah.
So you just got to be careful every now and then. You never know until you try to go for a loan for a lot of these people. So they walk in to see Mr. and Mrs. Bank Manager, and they make that application. It turns out that they didn't know about something, but they're no good there. So see a broker, you'll find out that we've got products to help you out. So why use a broker? Selection and choice.
Yeah, and I think you mentioned a number before. What did you say? How many different products?
For me personally, so my branch, I've got 37 lenders and 1,000 products.
Wow.
So we cover just about everyone in the spectrum.
I mean, there's no reason not to go to someone like you, is there? When you've got that much variety that you can sort of choose from, you tailor it specifically to their circumstances.
Well, that's exactly right. So you come to us, it costs nothing. So we receive a commission from the lender. It doesn't cost you guys anything, doesn't cost a buyer anything. There's no hidden fees, there's no charges on it. What happens is we do the legwork for you to get the best deal.
And do you think that's been something, I guess, a bit of hesitation from people before, that they think if they go to you, they're going to have to, it's going to be an expense, or they're going to have to pay out a bit of money to get you to, to find a loan for them?
Yeah, and that has come up. So people are, there's a hidden cost, does it come back later on? In actual fact, there's a fair chance that I can get a better deal than you can get through your own bank. Banks notoriously don't pass on the biggest discount they can do, and they might not have the best deal for you anyway. So why a broker? Because we've got more options, more versatility, better deals.
Okay. And I guess you've just outlined the main difference between using a broker and walking into a bank or using a bank. So that's it there in a nutshell. Hey?
You can go into a bank if you like. You always shop it around. They're shopping around for a home. They should shop around for finance. Go into a bank, see what they've got to say. Just be aware that in that bank you're going to walk in, they've probably got 4, maybe 5 products. Doesn't mean they've got the right product for you. Yeah.
Awesome. Mate, this is a question that I get asked quite a bit, and people ask, how much deposit do I actually need for a loan to put into a loan or a home?
So it depends on what you're trying to buy. You're trying to buy one to live in, so you're owner occupied, you're trying to buy an investment. But for most people, they're trying to buy their own home. At a bare minimum, you're going to need about 7%.
Okay.
So you've got lenders out there who will lend up to 95% of the value of the property. But what you've got to be aware of is the other costs that go into buying a property. So legal fees, rates, building and pest inspections, bank fees, and they've got to be covered by the loan as well. So another good reason to see a broker is we give a full breakdown on that. So up front, you know what you need and how much you can borrow.
Yeah. And that's changed from years ago, hasn't it? Because I remember, with the whole global thing that was going on years ago, people didn't even need a deposit.
Well, pre all the GFC madness, they were giving it away like candy at one stage. Would be a nice way to do it. But now, obviously, Australia's a fairly regulated banking industry, so there is big conditions on that. So 7% is going to get the job done most times. There's going to be some costs that come along with doing that, like renter's mortgage insurance. However, you can get into it. So 2 things that'll affect can people borrow money is the size of their deposit and what their borrowing capacity is.
Yep. Mate, lender's mortgage insurance, obviously it's, if you haven't got the 20% deposit, it's obviously insurance for the bank at the end of the day. So, how does that sort of have an effect on on things?
So lender's mortgage insurance, in a nutshell, for a lot of people, it's just the cost of doing business. If you think about it, getting 20% of it these days is quite an ask for a lot of people. With the property prices, it is hard to get that 20%. So anything over an 80% value of the loan, you're going to pay lender's mortgage insurance. Works on a sliding scale, so the further over 80% value of the property versus the loan, the higher your insurance will be, and also the dollar value of your loan.
Sure. Okay.
So with that in mind, what is lender's mortgage insurance? That's where the customer pays to insure the bank for taking the risk of lending them money. It actually doesn't do anything for the customer. So if that customer has issues, something goes wrong, and the bank ends up taking the house back and they sell it for less than the value of the loan, they will get some money out of the insurance company.
Sure.
But then the insurance company will come back to the customer to try and recoup some of their costs. So if you don't have 20%, you're going to pay it. But budgeting and planning and thinking about your own future with some loan protection insurance is also something that we talk about during the process.
Okay, that's good. We might talk about that in another time as well. Mate, let's talk about, I get questions about, having a fixed rate or a variable rate with the home loans interest rates at an all-time low now. What's is there a recommendation, or is there, I guess every situation is different, every person's different, their circumstances?
So fixed versus variable, it's a never-ending battle and conversation. It all depends. It comes down to a few things. What's the situation? What's the purpose of the purchase? What are they looking to achieve? What is their own personal situation? So do they have extra income coming later on? Do they need the flexibility of making extra repayments? Do they need offset accounts and redraws? So
sure.
Fixed interest rate comes with a great certainty. I have to pay on X day of the month, X amount of dollars. Nice,
that's right.
Consistent payment, where you are.
And I guess a lot of people want to operate that way, don't they? They want to have they want to have that certainty at the end of the day of exactly how much they're paying and when.
That's exactly right. And great for first homeowners. They get to learn, they're in a good routine, and then they can move on that future. The variable rate comes with obviously some more features. So you get redraws and offsets and a bit more flexibility, and you can make extra repayments. You can still do that with fixed, but there's a few more conditions. So fixed rate gives you nice certainty, but there's a few more controlling conditions on it. Variable will move with the market, but has more flexibility. Where are we at the moment? We're at historical lows.
I was going to say, that's the $1 million question out there at the moment, isn't it? What's going to happen? Where are the rates going to go?
Where are the rates going to go? No one knows. The RBA will set that. So first Tuesday of every month. The next one is Melbourne Cup Day. Smarter people than me are saying that we could expect one on that because they won't do anything for December and January. That is a $1 million question. In the short to medium term, rates aren't going to be going up. We know that we're going to remain either steady or maybe get a small rate reduction. Even if the RBA does do a cut, the banks aren't going to pass it all on because they've still got to maintain a certain percentage. They don't borrow all their money from the government.
Sure.
So they get it from your deposit account. So they've also got to pass that interest rate also affects how much return they give on your savings account. So that's where a lot of it comes from.
Okay. Mate, how long is it taking for the actual approval process at the moment? I know with our contracts, over the last few months, it used to be that standard 14-day period. Now people are saying, look, I need 21 days for finance because the banks are not going to do it in that time. So, run us through that. What's the approval process? How long is it taking?
So the approval process, if we put a loan application in and we've got all the documentation together that we should have, we can put a loan document in, we should get an answer from a bank, depending on what bank you've chosen, anywhere from 2 days to about 14 days.
Documentation, you're talking about the contract of sale along with their own personal documentation, pay slips, you're talking about income, blah, 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 all that sort of stuff.
So signing a contract, so traditionally it's 14 days for your finance. So if you sign a contract on a SAC day, hopefully you've done all the pre-work, you can get a loan application in by Tuesday or Wednesday. You should hear by Tuesday or Wednesday the following week. In saying that, different banks at different times do get heavier workloads depending on what's going on, and that's where some lenders have blown out to 14 days. And again, that's a great one to come back to why choose a broker, because at the stage of going through your bank versus other banks, if they're on a time frame, we can talk to them just so we know which banks have got slow turnaround times, which banks have fast turnaround times.
Oh, that's excellent. That's it. I guess you're saying most lenders are sort of 14 days, but that's obviously their own, not,
You'd expect an answer before that.
But I mean, you obviously speak to a client, you ask for all their information, you go through it. Obviously, if there's something missing from that, you need to send that back, go back to them. They need to find that documentation, comes back. So obviously, that's where things can blow out to 21 days or even more.
And where the blowout will happen is if the application hasn't been done properly in the first stage.
Sure.
So if we say it's between 2 and 14 days, well, the bank will pick it up in 2 days. They'll look at it, and then if it's not complete, if it doesn't have a pay slip, it doesn't have the right signatures, hasn't ticked the right box, then it goes back to the bottom of the pile, and it's another couple of days.
There goes your 21 days for.
So that's where we get the blow.
So
So again, that's about making sure that we get it all together in the first instance and get it right.
Okay, awesome, mate. Let's talk pre-approval. How beneficial is it? People to have it, and what are the pros and cons? Is it actually fairly accurate?
So pre-approval is great. So why would we do a pre-approval? One, it gives certainty. So if people are in the market shopping around, they know that I've been approved up to X amount of dollars. Let's give a budget. They'll know what their product is, what the repayments are, because all that calculation would have been done. Pre-approvals, it's the same as an application process. So you still need all the information. So putting in a pre-approval, again, you're going to get an answer somewhere between 2 days and 14 days, depending on your lender. And then the pre-approval stays in place, depending on the lender. 3 months, maybe up to 6 months, but you will have to keep refreshing your paperwork once you get to application stage to make sure circumstances haven't changed.
Sure.
Why do pre-approvals are accurate? So if you go through a broker, they would have done all the homework. They would have known your borrowing capacity, what your deposit amount is, all the mitigating circumstances. So they are fairly accurate.
Okay, and as you say, that can last sort of 3 to 6 month period. So obviously, someone's out there in the marketplace. They're looking for a home. They're still out there after 6 months. They still haven't found a suitable home. They've got to go back and go through that.
We'd go through it again. So would be on top.
But that's only a short process, is it? That's just
obviously
making sure that nothing's changed. And
by working through it with them, we would already know that. Okay, we know that your pre-approval lasted 3 months.
Yep.
You haven't found a property in 6 weeks, so we're halfway through. Would have a reminder, hey, where you at? Just touch base with them, and then a couple of weeks before it's due to finish. Okay, guys, you got a couple of weeks to go. So if we're going to go again on a pre-approval, let's just get some updated documents for us. We can have that lodged, and away we go.
Oh, excellent.
And then we just do it again.
If someone forgets sort of how long it's been, if you got a follow up in place that you sort of
very much so.
Excellent.
We work through it all the time. Another reason to choose a broker is we hope to be with them for life. So we'll touch base with them 6 weeks after the loan. How are you going? Where are you at? And then we touch base and refresh it. Obviously, in this day and age,
you might have new products that come up that you can offer people, and
Well, in this day and age, with just the movement in the market, so if we're thinking about someone who maybe wrote their loan a year ago, their interest rate could be sitting somewhere in the high 4s, and we've got rates at the moment in the mid to high 3s. So saving 1% a year, that can save tens of thousands of dollars over the life of the loan. Could save them a couple of $1,000 a year. So we should be refreshing it. We should be in touch with them to see where they're at.
Excellent. Mate, that's great. I think we've covered everything sort of for now, and look, I really appreciate you coming in. Joel McCartin, Loan Market Cairns. If you need to contact him, phone number, Joel?
0416 883 452.
Awesome. Email?
joel.mccartin@loanmarket.com.au.
Excellent. Thanks very much, Joel.
Thanks, Mark.
Awesome.